got the perfect voice to discuss this and much more today. Joining us, Michael Dommermuth is joining us from Manulife. He's the Asia CEO of Wealth and Asset Management Business, a very influential voice in global asset management circles. And of course, he's visiting India today, right now. And of course, meeting the partners at Mahindra AMC. So it's Mahindra, Manulife AMC, and Manulife is what Michael represents. Michael, good afternoon. Thank you so much to be coming on my show today. And we are chatting after 2.5 years almost. This is a perfect time to have you. There's a relief rally which is going on globally. Do you think it has more legs, and this appears to be beginning of the end of war-related worries?
We actually see some storm clouds gathering on the horizon. Let's be honest, as the Fed has raised rates 25 basis points, there's still the expectation that they're going to raise again to consensus view of 1.9% this year, 2.8% next year. Even if there is peace with Ukraine and Russia, to unwind the sanctions and have a material impact on the oil price will take time. We're operating in a stagflationary environment. Monetary liquidity globally is coming down. So while I appreciate the rally today, and we remain constructive on India, let's acknowledge that there's some dark storm clouds on the horizon.
Right. Let me, my next question actually is a leaf out of your answer that you remain bullish on India. We are witnessing a rise of the Indian investor here in India. The household savings levels to equities are rising. Still, realty, gold and fixed deposits are dominant, but equity as a portion of household savings are rising. In fact, I was looking at data. Your own partnership here in India is doing very well with assets under management rising, SIP, the systematic investment book, rising. Do you see this as a structural trend, Indian investors waking up, especially tier 2, tier 3 towns? Because Mahindra has a deeper penetration there. Do you see this as a structural wave which is happening in India?
We do. We love some of the things that we're seeing in terms of the regulatory reforms, the formalization of the economy, digitalization, reinvestment in manufacturing, import substitution, exports rising as a percentage of GDP. And so the dark storm clouds that I referred to earlier, India is in a far, far better position to weather this than they have been in the past. To your question on penetration of the investor base in India, is just far too low right now. Only about 2% of investors have invested in mutual funds, for example. But again, we're really excited about what you also mentioned, the SIP, systematic investment plans. 52 million people now have a SIP, and yes, it's a major focus for us. I think we've grown that over 3 times over the last year, and we think that in a tumultuous market like what we potentially face going forward, SIP is exactly the right way to go if we want to increase that market penetration.
Excellent. Michael, you have experience of observing development of so many markets across the world and Manulife's rich history of over 100 years of asset under management. Where do you see the long-term potential for a market like India, the demographics, the corporate earnings cycle taking off? If one were to take a 5-7 year view, many of our investors do have that kind of view. What would the bigger picture message from you to them?
Well, first of all, let's talk about the mutual fund market. It's been growing at a CAGR of 12%. We think that that's going to carry on. We think that the market is going to touch close to $700 billion by the year 2025. We'll be a major player in that. We think that the major focus for us and for the industry is putting forward suitable products for customers. We love what SEBI did in terms of the 2 basis point fees so that we can help promote understanding of the mutual fund market. It's about making sure, as we do, that there's a very large channel distribution. And along those lines, what we've seen over the last year or so is nearly a doubling of our portfolio from, say, 190 to 390,000 customers. that's what you want to see to promote the growth of the market. So we're very bullish on it.
Michael, let's take stock of your own partnership here with Mahindra's. How's the journey so far been, and what are the areas of focus from here on, the strategy to grow the business? It's a very fertile market. Talent is difficult to, there's a race for high quality talent in asset management because of the buoyant markets. But overall, what's your strategy you're going to adopt in this partnership from here on next 1 or 2 years?
Well, first of all, we could have picked a better partner than Mahindra. They understand the retail market in India in ways that we frankly never will. They have a fantastic brand that is well earned. We've seen enormous success with our JV, and to be honest with you, if we had not had a partner like Mahindra, we would not be seeing this type of success. We got the relative roles right. Mahindra brings their brand understanding and understanding of the retail market, and for us, investment is in our DNA. We operate in a variety of emerging markets across all of Asia, Malaysia, Philippines, Vietnam, Indonesia, just to name a few. And so we think that those learnings are relevant. What we need to do in terms of our side of the equation is we need to bring that expertise and understanding to the investment processes and the governance as it relates to the JV. And that's a centerpiece of our strategy. And it's one of the reasons why you see the equity desk and the fixed income desk that we have here adhering to global standards of excellence and delivering the results that they are.
Analyzing equity market valuations in India versus the potential return CAGR it can offer on a 3 to 5 year basis. What kind of corporate earnings growth do you see here? When you talk to your team members, what's the feedback do you see?
I won't get that specific, but I'll say this, is we're overweight on India when we look at asset allocation. We're constructive on India, though I mentioned that there's risk to the downside if oil prices remain high, for example, for an extended period of time. We really like the reform measures. We note that India embarked a lot of these reform measures during difficult market circumstances, and India is vulnerable to oil price shocks. We acknowledge that, but they're much better positioned to deal with that in our view. We see some particularly interesting sectors within India along the lines of those reform measures. So we note that India is well poised in terms of exports on auto and pharmaceuticals and those type of things. We think that the banking sector is pretty well positioned. So we like the India market, but we have to acknowledge that if oil prices remain at elevated levels for an extended period of time, for an economy that imports so much oil, is such a large part of their imports, is that will have an impact.
Just last one word on ESG investing. That's gaining traction here. More and more companies are complying with it, more and more funds in ESG. And, there is a lot of higher awareness now. Do you see this phenomena gather pace?
I do. I mean, it started off in Europe, and you're seeing it take off across Asia, and both the retail side and the institutional side. Here within India, a green bond was issued to fund water and tertiary sewage treatment facility. The Minister of Finance has announced that they intend to offer a green bond to fund CO2 efficient facilities. So it is taking hold. It's a very big part of what we do. We're one of the original signatories to the PRI Leaders Group. We're acknowledged by the UN for our governance and the quality of our transparency. We received a number of high ratings for them for our various strategies and governance. Within Singapore, which is the hub, almost all of our strategies are integrated. And like I said before, our job here is to bring the goodness of some of the things that we do outside of India into India. And over time, ESG would be one of those things.
Excellent, Michael. Thanks so much for joining us with your thoughts on investing and various parts of the market. It was great to have you.